In this lecture, we're going to be learning about stop losses, trailing stops, and break even. So you probably know what a stop loss is, okay? But we're going to be looking at them as part of our risk management, stroke money management techniques or tools. So a stop loss is a type of order in Forex trading designed to limit losses from a trade. Okay, a stop loss is a type of order designed to limit losses from a trade. Okay, and then a trailing stop is a special type of trade order that moves relative to price fluctuations. When the price goes up, it drags the trailing stop along with it. But when the price stops going up, the trailing stop price remains at the level it was dragged to. So that's a basic explanation of a trailing stop, even though we are going to look at all of these concepts practically. Okay. Then we have the last one, which is break-even. So break-even is the point at which your trade neither makes nor loses money. It is also known as a price at which you've entered into a trading position. So the typical way you use a break-even order is, for example, you enter a buy trade and then the market starts buying in your favor. The simplest way to then activate the break-even is to simply drag your stop loss above your entry price or just about your entry price. So that's you canceling your risks on that trade. So that's basically you saying you cannot lose that trade again. So if the market is going against you, starts going against you, you're going to be taken out at your entry position. So that's one way of managing our trades, right? Okay, so to explain this, let me just start with the stop loss. So the stop loss, most of you will know what stop loss is. So for a buy scenario, this could be your entry price, right? So you buy here, okay? And then you are expecting the market to travel upwards, maybe down to this location, right? Down to this location, up to this location. So this will be your take profit order, and then this will be your stop loss order. So your stop loss will be below your entry price in a buy scenario, and then for a sell scenario, your stop loss will be above your entry price, okay? Because you are basically predicting that the market will sell or go lower than your entry price. So this will be your take profit, okay, and then this will be your stop loss. So that's basically what a stop loss is. So always using a stop loss will ensure that you have a predefined maximum allowable risk. Okay, so with your position sizing, which we are going to look at later on, and your stop loss, these tell you how much you are willing to risk on a particular trade. Okay, so your stop loss levels are very important because nothing is 100% in Forex trading. Nothing is 100%. So if you buy, there is also a possibility that the market will not buy but will go against you. So your stop loss will help you limit your risks on that trade. Okay, so let me just come here on the charts. As you can see, I entered this trade and we are already in some profits. Still on the demo account which we opened. So for these trades, these are sell trades, right? So as you can see, this is a stop loss order. So this is one of the stop loss orders. Now this is how a stop loss order will look. Now for the sell trade, as you can see, the stop loss order is above the entry price, while the buy order is below the entry price, right? So you can actually drag them. This is called one-click trading. So you can actually drag them on your platform to show where your entry price or where your take profit orders and your stop loss orders will be. But also, let's assume we want to enter another sell trade. Let me use 0.03 for this one. So let's assume we want to enter another sell trade at this point, right? So it's called market execution, which will sell immediately, right? So if we have a position, if we have a point where we want to put our stop loss, like this point. So let's assume we want our stop loss to be here. We can just come right click and then horizontal position so as to get the exact price. So you can copy it, okay, and then paste it here in the place where it says stop loss. You can actually also copy it manually, but the way I just did it is the very easy way to do it. You can do it that way, and then for your take profit, let's assume we want the take profit to be here. You can also copy the property or the value of the line and then paste it here. And now when you sell, you can then see that our stop loss has been placed here and our take profit has been placed here. So that's the simple way of using your stop loss and take profit orders, right? Good. So that's it about your stop loss and take profit, even though we are supposed to just cover the stop loss. But that's it about your stop loss. Now for the next one, we have the trailing stop. Okay, so the trailing stop is a type of order that trails your position. Okay, so let's assume we have a buy order here. Okay, and then we have our stop loss here. And we have our take profit here. Our take profit, right? So let's assume the market starts to buy in our direction, start to buy in our direction, and the market is presently here, the price is presently here. Now, as you can see, it means we are in profit, right? We are in profit because the price is heading to our take profit target. But since Forex is a game of probabilities and anything can happen, no matter how good your strategy is, no matter how good your analysis are, okay, since no matter how good your strategy is, something can happen. It means the market can reverse against you. A trailing stop, when activated, will just take your stop loss and bring it above your entry price. So your stop loss will no longer be here. Okay, so your stop loss will no longer be here. Your stop loss will be here. Okay, that's what the trailing stops do. So after it takes your stop loss here, and what it then does is whenever the price keeps going in your direction, the trailing stop automatically follows your price. So it means your stop loss will keep following your price based on the specific amount of pips you've specified for your trailing stop. Okay, so that's how the trailing stop happens. So if your trailing stop keeps going, if the market keeps going in your direction, your trailing stop will keep following you, that your stop loss will keep following. And then you can even if you see that it's going really well in your direction and very well in your direction, you can even close your take profit order and just allow the trailing stop to keep going, because in this case it might even go above your trailing above your take profit, that if it's really going very fast in your direction. Okay, so you can even close your take profit and then just allow the trailing stop to go. So if the trailing stop keeps going and then it now starts coming against you, if it starts coming against you, the trailing stop won't get modified. Okay, the trailing stop won't get modified. It's going to just stay there, and then if the market goes below it, you are then taken out in profit. So that's how the trailing stop work. Let me just see these trades. Okay, the trades are now in minus. I wanted to just activate the trailing stop for one of the trades. So let me just do it anyways. If you are to activate the trailing stop for, let's say, this trade, all you need to do is to right click, and then you then see trailing stop. Okay, you just right click and then you see trailing stop. So you can now choose the number of points you want the trailing stop to be. So you see 15 points, you see 20 points, you see 25 points, 30, up to 50 points. Remember we spoke about points and how to calculate them, how to convert them to pips. You know that 50 points is 5 pips, right? So 45 points is 4.5 pips. 40 points is 4 pips. Okay, and so on and so forth. So you can also choose a custom value where you specify the amount of pips or points you want. You know that there are 100 points in 10 pips, right? So if you choose 100, point, it means it's going to trail it by 10 pips. So that's how the trailing stop work. That's how the trailing stop work. And then for the third one, we have the break even. Okay, the break even. So this is another method of trade management. Okay, this is another method of trade management. This is trade management. The trading stop is trade management. The break even is trade management also. So for the break even, what it does is, for example, let's say we have our buy here. Okay, we have a stop loss, we have a TP. So let's assume the market just starts going in our direction, keeps buying, keeps buying, keeps buying. When you activate your break even, or when you take your trades to break even, what happens is this stop loss gets brought to your buy entry price, just either a little bit above or at the same place. Okay, so that you have basically eliminated the risks on this trade. So your stop loss is now here, and then even if the market starts to go against you and takes you out, it's going to be taking you out at your entry price, not at a loss. Okay, so with this concept, if you have your trades at break even, okay, or a little bit above your entry price, you could now enter multiple trades with more valid signals, right? Without increasing the risks on that currency pair. Okay, so if I have brought my stop loss to break even here, and then if the market just keeps going, let's assume it's a trend following strategy, and then the market just keeps going in my direction, and I now get a retracement around here and a signal to re-enter. I can re-enter without having to increase the risks on this currency pair, okay, because I have brought the first trade to break even. Okay, so this is basically saying this is zero risk. I can enter more trades and just keep taking them to break even and keep entering. So if they all hit my profit target, fine. But if they turn against me to take me out, they are going to take me out in either profits or with no losses. So that's it for the stop loss, trading stops, and break even. So in the next lecture, we're going to be even learning more concepts, more techniques of managing our risks and our trades. Hope to see you in the next.